What's going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex. Today we're going to be going over what call options you should buy for AMC. So a lot of you are kind of confused on how to play options against AMC because it's such an unusual stock as of this moment. So we're going to be going to the options chain and checking out some of the options that you should consider if you want to buy call options. Now, buying call options regardless is going to be a little bit risky, especially on volatile stocks such as AMC, but this is going to be the best options that you should buy, call options specifically, to make the most profit. So weekly options is not what you're going to want to do. You don't want to buy short-term expiration options on AMC. Right now, AMC, as we saw earlier, it's pretty much consolidating within this $55, $60 range. So that's very bad for call options because when AMC goes flat, you're going to be losing a ton of money due to time decay on your call options. So if it goes into something like $60 strike call for expiring this week, it's just something you don't want to do. Look at the theta, 1.07. That means for every day that passes and AMC stays flat, assuming it stays flat, the call option is going to lose $100 and $107 per day. That's a huge amount of data. You're going to be losing a ton of money, a ton of premium from these options if AMC does not go your way, which is basically going up, an nice upwards movement. So that is why you don't want to play weekly options, call options. If you have 100 shares, selling call options would be the move to go because time decay is on your side. If you're buying options, time decay is not on your side, and you're going to be losing a lot of money assuming AMC stays flat, which right now it's in a consolidation phase, so it's pretty risky to do weekly options. So you want to do something like probably like a July 16th. You want to do a few weeks out, few months out. Give yourself lots of time for the calls to play out in case AMC consolidates for a while. Because right now, a lot of people are losing money on call options, and that is why. It's mostly because of the time decay. It's just really high, especially with the high implied volatility with AMC. The premiums are going to be a lot higher, so you're going to be losing a lot of money every day if AMC does not have an upwards movement. And also, the higher the strike is, the more data it is. So, for example, if you do a 145 strike call expiring this week, you're going to be losing a lot of money if AMC doesn't skyrocket. So the safest way to do options on AMC would be to do probably July 16th or later. You could even do for August because we don't know when AMC is going to shoot to the moon. So we want to give ourselves lots of time so we can capitalize when that happens. And the higher the strike, the riskier it is. But when options go from out of the money to in the money, that's when you're going to be realizing the most amount of profit. So if we take a look at something like a 145 strike, implied volatility is going to be a lot higher on it, as well as theta. So theta here, most of the premiums are already bled out, so it's not going to have that big of a factor, but implied volatility is going to be pretty high. So the premiums are going to be high as well. Even though $8 doesn't seem like a lot, it's still a lot for such an out-of-the-money call option, $145 strike, which AMC needs to triple by June 25th, which is in 2 days. So the best call options would be July 16th or later, something like a July 30, to give yourself lots of time for AMC to play out. And you want to do something kind of closer to the money. If you can afford to be a little bit risky, go further out of the money, because the further out of the money you go and it ends up squeezing, you're going to be making a ton more profit. So for example, if you put in, let's say for example, $2,000 into $60 calls versus $2,000 into 145 strike calls, and AMC goes to $200, you're going to be making much more profit on those $145 calls rather than the $60 calls. That's just how it works, because as the further strike goes into the money, you're going to be making a lot more profit, because those contracts then have tons of intrinsic value, and it makes those contracts even more valuable. So my recommendation would be something like a $60 $60 strike call expiring July 30th or later. Expiration date would be the best way to buy call options. Now, if this is assuming you want to buy call options, my recommendation would be to buy shares and selling these far out of the money calls every week in order to capitalize on some nice weekly income. But if you do want to buy calls, you want to be a little bit risky, $60 strike, something close to the money would be your best bet. Yeah, so that's about it for this video. That would be my recommendations if you want to buy calls. This is simply for buying calls. I highly recommend buying shares instead. There's no time decay, and if AMC triples in price, you're still going to make a nice profit. But that's about it for this video. If you have any questions, leave it down below, and subscribe if you're new to the channel. Helps out a lot. Thanks for watching.